on this discussion, which is on a very important topic. Before we start our panel, I would like to present you a message that His Excellency, the Ministry of Finance, Mr. Alexandru NAZARE, has prepared for us. Unfortunately, he had an unforeseen departure abroad, but he insisted that he wants to send a message, and this shows the importance of the topic of the panel and of what we are discussing these days here. So I kindly ask my colleagues to put the video on. Thank you.
Ladies and gentlemen, it is an honor to address you, even in this virtual format, at a moment that demands clarity, determination, and a truly shared strategic vision. The reconstruction of Ukraine is a continental project whose success will influence Europe's economic and security landscape for decades. Romania has experienced firsthand in the magnitude of this challenge. As both a neighbor and a committed partner, we have felt the strategic, economic, and humanitarian pressures generated by the conflict. Over the past years, Romania has become one of the key logistical corridors for Ukrainian export, has adjusted fiscal and customs procedures to support regional stability, and has worked closely with private actors engaged in cross-border initiatives. This experience offers a strong foundation for the next phase of the reconstruction, one that must bring together public institutions, the private sector, and multilateral partners in a coherent long-term effort. Rebuilding Ukraine will require capital on a scale Europe has not mobilized since the post-war period. And although the private sector will play a central role, private capital ultimately follows predictability. The essential question is not whether companies are interested in contributing, but whether we as policymakers can offer a financial architecture that reduces risks, accelerates investment decisions. That is why discussions on insurance, blended finance, guarantees, and public-private mechanisms represent the pillars of a credible reconstruction model. Romania supports a framework that expands access to guarantees, strengthens political risk, insurance for key sectors, and deepens cooperation with international financial institutions. Such instruments create the confidence needed for medium and long-term engagement, especially in areas vital for Ukraine's recovery, such as infrastructure, energy, logistics, and technology. From the perspective of the Ministry of Finance, Romania is advancing several policy directions that directly support this agenda. We are improving coordination between national institutions, European mechanisms, and the private sector so that the Romanian companies, whether they are large or small, can participate effectively in the reconstruction process. Stability, transparency, and consistency remain the essential foundation for any flow of capital. Romania is also prepared to act as a regional financial platform for institutions and companies involved in reconstruction. Our banking sector is robust, well capitalized, aligned with the European regulatory standards, and experienced in managing complex cross-border operations. A stable neighbor must also be an economically connected neighbor, and this is a commitment we intend to uphold. Reconstruction cannot be separated from the logistical and financial corridors that sustain it. Romania already hosts essential transit routes for Ukraine exports, and we will continue to expand the Danube and Black Sea platforms in line with broader European initiatives. Still, Romania needs to participate early and develop reliable infrastructure in the border region that are essential for ensuring the supply chains and that can operate efficiently once reconstruction accelerates. Yet, infrastructure alone is not enough. What is truly needed is a corridor of trust, a framework in which investors, insurance, and financial institutions can operate with confidence and predictability. The private sector brings the speed, innovation, and execution capacity that the public institutions cannot match, making its role central, not complementary. Successful reconstruction demands sophisticated elements, robust engineering, EU-aligned energy and digital systems, complex financial structuring, and credible insurance coverage in a volatile environment. In this respect, many Romanian companies are already preparing to expand their engagement in Ukraine. Our responsibility is to ensure that this effort rests on a stable, long-term foundation. For this reason, Romania supports the development of the concrete cooperation frameworks, meaning clearly defined agreements for specific projects. This is in view of a transparent distribution of institutional responsibilities on both sides. Such mechanisms ensure continuity, accountability, and the ability to move rapidly from commitment to implementation. Finally, Ukraine reconstruction is inseparable from the European trajectory. Alignment with EU standards in governance, procurement, digitalization, and financial regulation will significantly strengthen investor confidence. Romania will continue to support Ukraine on this path because the long-term success of the reconstruction deepens on this alignment. Ladies and gentlemen, reconstruction is not a single project, but the redesign of an entire economic system. It requires political vision, financial engineering, institutional cooperation, and the decisive involvement of the private sector. Romania stands ready to contribute with all these instruments as a neighbor, as an EU member, and as a committed partner in building a stable, prosperous, and modern Ukraine. On this note, I congratulate the New Strategy Center for organizing this essential conference, and I wish you all successful and impactful discussions. Thank you very much.
Thank you very much, Minister NAZARE, for this strong statement. And I'm taking two things from this. The first is that I see a very clear vision that the Romanian government needs to get involved. And this is very important, I think. And also, the second important things I've taken from this intervention are the words early and rapid, which is also in the direction of what I would like to say, just to open the discussion and set the frame of this panel. When we speak about reconstruction, we typically tend to think about things that would happen after the war, but I think we need to think about things that we need to do now, to be prepared, to intervene now, and to be even more prepared when things can accelerate. And because these preparations and these things that we do today will accelerate Ukraine's rapid recovery, and when Ukraine comes back in the European and global economic ecosystem, everybody will have a lot of benefits, not only the Ukrainian society and the Ukrainian people. And our aim in this session is to bring together a broad and balanced perspective. We have here representatives from international financial institutions, private companies, risk management. So I think we have this diversity which is which was deliberate, and it has the purpose to provide various angles on what we need to do in order to accelerate the reconstruction project. And last but not least, I would like to address the first part of in the name of the panel, the private sector, which I think has proven historically to be the most effective and also efficient capital allocator. Therefore, the discussion of whether private capital can help and can enhance reconstruction projects is also very important. And The goal today is to discuss about mitigation, risk mitigation instruments that the financial industry can bring in order to support these projects. And now, with this framing in mind, I would like to start with the presentation of our speakers today. And first, we welcome Mr. Volodymyr TSABAL, the Secretary of the Budget Committee of the Verkhovna Rada of Ukraine. He is also a chairman of the Temporary Investigative Commission on Public Procurement Violations and chairman of Economic and Public Finance Groups in Holos faction. Mr. TSABAL combines deep public finance responsibility with prior strategic consulting experience in banking and telecommunications, and this is a rare mix that gives him a dual advantage. He understands both the reform-oriented needs of the Ukrainian government, but also the financial discipline required by private investors. Thank you very much, Mr. TSABAL, for having taken the time and also the risk to come here. Next on our panel is Mr. Takayuki Sato, Resident Executive Officer and Regional Head for EMEA at the Japan Bank for International Cooperation. JBIC has a long track record of financing large-scale international development and reconstruction projects under challenging conditions. JBIC brings decades of experience in export financing, development bank lending, public-private finance coordination, and these capabilities, they are instrumental in the reconstruction projects for Ukraine. Thank you, Mr. Sato, for your opening to share your thoughts and ideas. And from the United States, we have Ms. Susan E. Walton, Senior Advisor for New Markets, Global Risks and Resilient. She's a Senior Finance and Media Executive with over 20 years of experience running in the global institutional investment research franchises of top-tier investment banks. Susan was educated in Harvard University, London Business School, and UCL, and since her career in the city, she focuses on her role as Executive Director and advisor to promising high-growth international companies in media, technology, security, and defense sectors. Thank you very much, Susan, for being with us today. We also welcome Mr. Sergiu, CEO of BCR, one of Romania's foremost banking institutions. Under his leadership, BCR has been a pillar of corporate and trade finance in Romania and also in the region. Mr. Manea's insight into regional banking, cross-border finance, and liquidity provision positions him to open relevant windows on how financial institutions in neighboring countries can support reconstruction, acting as intermediaries, extending credit and facilitating capital flows into Ukraine. Sergiu, we appreciate your offering your time today. Finally, representing the private corporate sector, we have Ms. Alexandra OLARU, Director of Legal and External Affairs of Vodafone Romania. With her strong legal background and operational experience in telecommunications and regulatory affairs, Ms. OLARU brings a corporate investor's perspective, how a major private enterprise perceives risk, regulatory environment, infrastructure needs, and long-term commercial viability, all critical when considering telecom, digital infrastructure, or other private sector-driven reconstruction projects in Ukraine. Thank you, Alexandra, and welcome to the panel. Now, let's start with the questions. Volodymyr, what do you think? I would propose we start from Ukraine because we are talking about the reconstruction of Ukraine. And it would be interesting for the audience, I think, to learn about the urgent needs, the most urgent needs that Ukraine has in terms of financial instruments to support the reconstruction projects. And also, I think it would be useful to learn about the legislative priorities that you have on your agenda in Ukraine and how these priorities or legislative actions or even other types of projects can facilitate and enhance the access of international investors to the reconstruction projects. Thank you.
Thank you, Victor. thank you for inviting to this panel. As a member of Ukrainian Parliament and also as a person with long previous private sector experience, so it's quite interesting to see how the private sector interacts with the state in Ukraine with regards to participating in the country's reconstruction. So there are some successes that we achieved in these almost 4 years of the war, but also there are some big challenges that are not yet solved. So first of all, when we talk about infrastructure, there are actually two types of reconstructions that we might talk. So first is reconstruction of some physical assets, non-commercial, let's say, assets, like destroyed school, destroyed infrastructure, destroyed like social infrastructures, like clinics and so on and so forth. So here I think this is where the reconstruction is driven mostly by the state, IFIs and other states, our partners, our supporters. So here we see successful cases of how the state managed to learn how to interact with the private sector, so to make sure that the involvement of the private sector is increasing. Even though when I think about 2022, when the first reconstruction project started in my native town that everyone probably heard, Bucha, so there were few private companies that were willing to come there and to to run for some state public procurement procedures, because in Ukraine, as in many other countries, usually there are two types of companies: those that want to deal with the state and those that do not want to deal with the state. And the more bureaucratic country is, the fewer amount of those companies are there. And here I want to say that what I see, that the amount of private sector companies, the share of the private sector companies that are willing to participate in the reconstruction of that part. So it's actually started to grow, thankfully to high involvement of IFIs and the international partners. Because I think if not that involvement, even like looking at my native of my town, so I see that the high involvement of the let's say foreign capital, so it helps that. So I'm saying this to make the point that actually one of the key important thing that we need, and it's not a financial instrument, but that's kind of capability building that is typically brought by the international financial organizations, but not only. So this is one point. So the second important point that I want to make is, if we are talking about the reconstruction, and the involvement of private capital, so there are two types of private capital. So the local Ukrainian, and I will start quickly with that, and then the foreign private capital that we want to come to Ukraine and to kind of participate in the reconstruction. So for local, so the two main challenges are a bit different than for foreigners. So for local, it's first, what I mentioned is actually not willingness to deal with the state because of bureaucracy, because of the procedures, and so on and so forth. But there is another important thing that rarely mentioned, is access to financing. So Ukraine is unfortunately now is in the situation when there is no access to debt financing. There is almost no access. So the debt, the loans to GDP ratio in Ukraine is less than 20%. So I think just for comparison, in Romania, I think it's around like 50 or 60. So like almost whole GDP is dedicated to finance the private sector. So in Ukraine, if you are the company and you want to do some business, so you need to raise equity. So you cannot, it's very hard to get that. So the banks finance the state. So, for example, the level of financing by the banking sector to the state is 2 times higher than to the private companies. So the banks have 2 times more instruments that like the government bonds and like other instruments where they finance the state 2 times higher than in the private sector.
Companies.
So that's a challenge that we as a country need to fix somehow. And one of the solutions could be the access to foreign debt, not equity, debt financing. That is a very challenging thing to say, but here where we kind of expect help not only from IFIs, but also from sovereign state.
So that's, sorry to interrupt, so what we take as most urgent needs, we take this need for debt, right?
Yeah, so that is just, yeah.
Good,
and
for private companies and also for the government.
Sorry? Yeah. And we as a government, we are competing actually with because we want the banks to finance us. So I'm the member of the budget committee. Yeah. So it's kind of hard for me. I don't know on which chair I'm sitting, because on one side I want banks to finance the private sector to participate in the reconstruction. But on the other side, if they finance the private sector, they don't finance the deficits. So this is
so let's give them the opportunity to tell us how they see the risks and the challenges of investing and providing that to Ukrainian businesses. And I would go to Mr. SATO. And Mr. SATO, I'm really interested and curious in how a development bank is perceiving risks of all types about private investments in Ukraine, because I think that's where we start from.
Okay, thank you very much. First of all, thank you very much for having me today. And before talking about the private capital, please allow me to explain about the Japanese assistance for the Ukraine situation. As you see, that the Japanese government has demonstrated a very strong commitment for the Ukraine support right now, and all Japan's effort, that not only the Japanese government but also JICA, JETRO, and JBIC that are implementing the numerous initiatives in Ukraine right now. And as you see, that the Japanese government already committed that more than 15 billion for the Ukraine assistance right now. And even though this difficult situation, that a bunch of the Japanese equipment are now exporting to the Ukraine for the reconstruction. And JBIC itself, that we are involved in the financing projects like prosthetic limbs project in Ukraine. This is very good for how can I say, the soldiers that will use this kind of the prosthetic limbs. And also that we provide a finance to the Black Sea and Trade and Development Bank. And the BSTDB will use these funds for supporting the Ukraine assistance. And also that not only that, furthermore, that we provide a guarantee for the Polish governmental bank BGK issuing the samurai bond in Tokyo market to mobilize the private fund. And now that the BGK use that fund for the Ukrainian refugees in Poland. So such kind of the assistance that we are providing right now, and as a part of the Japanese government, and with the JBIC is intend to proactively consider the support for the Ukraine when the conditions are appropriate. That regarding the private capitals, I strongly believe that we all agree that the huge the financial needs, as he mentioned, in Ukraine, and mobilizing the private funds is essential, alongside with the public funds like JBIC. But on the other hand, it is very the fact that is that it is very difficult for the private the sectors to provide the funds that are under the current situation. So today, I would like to share the 3 points of my thoughts with you. The first point is that the key point is that anyway that I feel that we are lacking the exact information. Because I understand that even though the current difficult situation, the Ukraine is now achieving the economic growth actually, and also that many loans are being repaid. So, but this kind of the information is very limited for the general public. So that's why that I would like to encourage that the many institutions like you or this conference is that really important to share such kind of the exact real information with the general public. And the second point is that the local network. Actually, that without any local network, that the private financial institutions have the difficulty to provide the finance for each countries. But on the other hand, I understand that the several financial institutions already taking a risk and still maintain the local network in Ukraine right now. So like EBRD or BSTDB or the Romanian commercial banks have still working in this market. So that's why that I would like to put that the importance on the collaboration with such kind of the existing taking risk the institution to make that the private finance for much more, how can I say, active in this market. And third point and the last point is that from a little bit of financial engineering that the ministers also mentioned the blended finance must be considered because right now I understand that if the 100% political risk coverage can be provided by the insurance company, including war risk, the private capital can be mobilized. That is already the truth. But I understand that there is some limitation and everything cannot be covered such kind of the 100% political risk. So in that sense, we should think about that blended finance. Blended finance means that the public sector should take the risk which the risk that the private sector cannot bear, or assuming that the first loss of that project using that subsidy or concessional loan. So today I would like to emphasize that this blended finance is how can I say, much more focusing on to develop the further private capital mobilization. Thank you very much.
Thank you very much, Mr. Sato. And I'm taking the ball from you regarding the blended finance and the war risk insurance and political risk. And I would like to ask Susan about what type of specific blended finance mechanisms could address the limitations that war risk insurance, for example, or other financing products that could be put on the market exclusively by private companies could be helped by these blended finance solutions.
Is this on? Yeah, that's great. Thank you very much. I'd like to point out, in addition to being an American, I'm also a Briton, and I'm also a Slovak as well, which is why I'm very interested in this region and have spent so much time here. So thank you very much. If maybe we go back to a little more fundamental view to be able to answer your question, from a private financing and investment perspective, why are we interested in investing in Ukraine? It is for the economic and national security of really the Western Hemisphere and for all of Europe. So if we really have to acknowledge what is our imperative for doing so, and it's very, very important. And what is security about? Security is really about supply chains, and then supply chains and money. And security priorities rely very heavily on industrial policy. And we heard the minister talk about this as well. You have to have an industrial policy because the industrial policy actually guides capital. It guides public capital and it guides private capital as well. There's a lot of capital in Europe right now. It's estimated by ODI, the Overseas Development Institute, of which I'm associated in the UK, that there's 17 trillion euros of private capital here in Ukraine, here in Europe, that is really sitting with very low returns, or actually in bank accounts, in pension funds, bank accounts that are actually yielding almost 0% interest. And what do we do to unlock that capital so that we can invest it? And the important point here is how do you make projects investable? What are investable instruments? So we know there's capital out there. What do you need for a project? You need access to that capital. When you have access to that capital, the next very important thing is to be able to price your risk so that you can go into a project and make your investment. And this is where governments and other instruments are the most important, because they're de-risking that price of risk, and that's extremely, extremely important. And the other thing you need is you need liquidity. You need liquidity to actually exit that investment. And again, it's very important too to have that price of risk and instruments that are from the IFIs, the Development Institute, governments, etc., who would support actually pricing that risk and creating the liquidity to get out. All of those things together create an investable, whether it's an instrument or an investable company, to be able to do so. You talk specifically about insurance. I think there's many forms of insurance. There's actually war insurance. There's a very interesting conversation actually before lunch about the Import and Export Bank Consortium here and the Romania's role in that. And that's actually incredibly interesting for those setting up companies. We have a lot of competition out there. setting up companies here, to know that they can have guarantees around that. That's another form of insurance that is creating an investable company. And we're looking at, say, attracting US money into Ukraine, while Romania is perfectly placed to be a trampoline, not just in terms of investment into it, but and for all the reasons that the minister said, but it's actually perfect geographically placed as well. So we were just discussing the possibility of Britain and the UK of setting up companies here in Ukraine, and what that would actually look like from a banking, insurance, and financing perspective as the projects come on board for Ukraine. Another thing I think is important too, is a form of insurance too, other than the big obvious ones, is the participation of governments in creating offsets. So that's basically creating an order book, right? But the order book is guaranteed. So whether you actually take it or you pay for it, the order book is actually there. Well, once you have an order book, an order from a government, and you see this all the time in the defense industry, that is guaranteed, then it's very easy to get private capital to come in alongside and creating an investable environment for that. And I look at that actually as another form of insurance as well.
Thank you very much, Susan, and thank you also for this beautiful bridge you've built from insurance, government intervention, and now financing. Because my next question goes to Sergiu MANEA, where I would like to ask you, Sergiu, to address how does the financial sector in Romania and Europe, at least in the region, perceives the risks associated to private investment in Ukraine, and whether to what extent you also perceive an opportunity there, and whether you have any initiatives in progress at the moment in the financial sector in Romania.
Yeah, well, so thank you for the question. Thank you for having me. I just want to set maybe a context with two things. First of all, I will not associate the word opportunity with what's going on right now. So it just cannot be in the same sentence for me. That's point number one. It's a tragedy and full stop. That's point number one. Point number two, reconstruction of Ukraine starts with us, Europe, first and foremost, making sure that Ukraine can wage its defense war. Because in fact, it's our defense war. And before talking reconstruction, we should just make sure that the financial situation Ukraine is in as we speak will not preempt Ukraine defending itself, defending Europe, and actually thinking and imagining an architecture of reconstruction. Just to give you some numbers. We are now basically at a point where Ukraine is running a debt to GDP of 110%, a 20% a year budget deficit, and actually relies or should rely solely on Europe for financing. Now, if you look on the costs of waging war, we're probably talking 100 plus billion per year, right, which is a huge amount. But in fact, if you look at the 4-year projection, it's only 0.4, maybe less, hopefully the world will grow again, 0.4% of the GDP of the NATO countries, excluding US, right? Now, 0.4%, it's the price we will have to pay. Make no mistake. Susan was very, very clear that this is not about making money or being in the position to invest or not because we want or not. We have no other choice. And this needs to be very, very clear. I think it is clear to everybody around here. Second, if you look at the defense budget of Europe today, for 450 million people, we are spending $270 billion, which is actually, believe it or not, 55 billion more than what China spends every year, according to official numbers. Now, may I kindly ask you if Europe projects the same active deterrence or aggression as China projects these days? Yes, no, maybe so. No, the answer is no, right? So I go back to what was said a little bit earlier regarding the needs that Europe actually gets strategically its act together, not only in terms of funding, financing, or finding amazing instruments, but actually getting its own defense strategic logic at work. First formulating it and then executing it, right? So this is the context. And again, the first order of emergency, not urgency, emergency, is to make sure, Europe needs to make sure that Ukraine can continue defending in the war is waging as we speak. Now we need to talk about reconstruction, right? I think here I'm a little bit more reserved because actually what you need, once again, if you look at it like to a business, you have to develop a strategic logic of this reconstruction. The positive thing is this reconstruction will not happen via an edict. It is not going to happen in a couple of months. And it will take actually the whole village, at least the whole European village, to make it happen, which is great. Because I think the entire architecture of governance of Europe needs change. Right? So we need to understand what is it that we want to do. And we will have to start, and it was said a little bit earlier, and it was said also by the minister, we will need to start from the governance and the architecture of governance, again, not only in Ukraine, but in Europe in relation with Ukraine. And maybe in Europe in relation with itself. Then we have to understand what is it that we want to do. How the things we want to do are coming actually to the benefit of the country, right? So what are the country's urgencies and emergencies? And how we are going to address that, not only from the financing perspective, but first and foremost from the technical and technological perspective. What is it that we want to do? Why we want to do that? How much is going to cost? What's the business case actually for the benefit of the citizens of Ukraine, first and foremost, for Ukraine as a state and for Europe? How are we going to execute that? Do we have enough technology? Do we have enough workforce? And then we should ask ourselves the question, how do we fund that? And talking about funding, so I'm not going to speak too much. Now I finally get to answer to your question. Again, it's a lot to do before funding. Without the things we need to do before funding, there will be no funding. Okay, so just that we are very clear about that, right? Good. Talking about funding, Europe today is actually developing two directions of action. One is the joint issuance, and second is the reparation loans, right? Reparation loans, as you know, means to basically use somehow the Russian central bank reserves, wherever they are in the world, and issue funding against those. It's like issuing a stable currency, but backing with something which is not yours. And as you can see, the cracks actually already in the unity around the execution of these reparation loans within Europe, you'll see that the probability that they are happening is actually very low. So what we are left with is joint issuance in Europe, right? Well, this could be a great opportunity for Europe, because it is time for Europe to move to a single fiscal union, to a single capital markets union, and maybe in order to help ourselves by helping Ukraine, we will accelerate processes which will make out of Europe a dynamic contender on the global scene. Maybe. And by the way, we have no other choice. Now, getting to the private sector, as now I'm going to talk not only as a bank CEO, but as a board member of the largest employer federation in Romania, right? Concordia is the name. Look, I will actually always tell people, go in risky territories only if you have enough equity to actually develop a robust risk-bearing capacity. Right? This is what the government should develop quasi equity instruments enabling private sector not to actually risk bankrupting their own businesses. Okay? And I go back to governance, architecture of decision, process, milestones, and so on and so forth. Otherwise, if you are weak on equity and you are only a small part of a value of the supply chain and not of a value chain, because here I disagree with Susan, it's about value chains, I think, and not supply chains, then you better stay home. Do the things you can do, create a sustainable business, create a war chest in terms of equity, then go in bigger things. Thanks God, Romania has a number of very mature companies who are able to basically deliver very complex projects, no matter if we are talking about transport infrastructure, civil construction, factories, deployment of processes, and large-scale engineering. So indeed, Romania can play a role, a significant role in delivering turnkey projects there. And on top of that, there is one more thing which Romania can help with. We were not fighting the war. And again, our neighbors did. However, we experienced with a number of supply chain disruptions, logistical problems to solve of a magnitude we've actually never did since the Second World War. We do have now experience and expertise in order to contribute, if required to do so, to actually help on organizing very fluent supply chains, logistical solutions, and actually making sure that those projects we are talking about can happen without friction. So this is where I think we are at. Thank you.
Thank you very much for your intervention. And yes, I appreciate you giving me a note on the opportunity word. It's probably what I wanted to address was actually most the business logic that needs to sit behind financial instruments, because on the other hand, we know and we see that financial institutions, and especially private financial institutions, would not step in, as you also mentioned, without government and political support, because reconstruction is not a business, it's a political vision that needs to be put in place, and where businesses can contribute and accelerate the process. So that was actually what we were trying to address. And now, besides, in order for these financial instruments to work, we need also some other types of infrastructure, the digital infrastructure. And I would like to ask Ms. OLARU, how can telecom companies contribute to the digital resilience and cybersecurity of the infrastructures that are needed for the reconstruction processes? Thank you.
Thank you for the question, and thank you for having Vodafone here. I also have a context, which makes two Romanians on the stage having a context. My context is that Vodafone is actually present in Ukraine. We have our brand there, and through a partner company, we're employing over 1,000 people. So while Romania has experienced, as Sergiu has explained, the consequences of a war, we have also experienced, through the lenses of a company that we have there, the actual happenings of the war. And while it's very difficult for us to relate to that, we can understand that the reconstruction effort has already started for many of the companies that are on the ground. Because it was an obligation, because around 10% of our infrastructure was in continuous need of repair. Because the war has taught us that we needed to have more resilient infrastructure, telecoms infrastructure, in order to be able to serve not only the clients that we are having, but also to defend our people and to defend our big clients that were absolutely reliant on our network. So around 90% of our infrastructure needed energy backup in order to be able to function during war. This is something that will not stop. This is a learning that will come with us throughout the journey. And while Europe is getting ready for its journey in many areas, from artificial intelligence to Digital Network Act, we also need to understand that this getting ready is also getting ready for having Ukraine alongside our way. And the more difficult it is for us as European companies to cope with that, even more difficult will be as a sister country will need even more and more support. So we cannot stay in isolation, and as Romanians that were trying to support as much as we could a country that was in need, we also need to think about regulation, what will help us, what will hinder us, what will make us better in Europe will also make us better in Ukraine. What will stop our development in Europe will make it impossible for us to contribute to the reconstruction of Ukraine, which, as I said, for a company like Vodafone, is not even a question mark, is an obligation towards our people, towards our clients, and at the end of the day, towards ourselves. Another smaller side of my context is the fact that 5 days after the war started, a family came to us, and that family is with us since February 2022. So I feel a personal obligation that this country should help them go to a better place, go back to a better country than they had to live 4 years ago. And that should come from us as citizens, but also from us as companies and as responsible players of the European Union. For as long as we continue to witness, we will not be able to offer that. For as long as we continue to play an active role, maybe we will be able to deliver that towards people that need it and towards a country that really deserves our entire attention because it has defended us. Thank you.
Thank you very much. Now, I would like to ask the audience if there are any questions for our speakers before we go to a next round of questions. Is there any interest in? No? So I would like then to come back to Volodymyr, because we are talking about Ukraine, and I know the people and businesses in Ukraine, they need not only words of support, but they need specific, concrete actions of support, and they need real resources to finance whatever is needed in order to keep this country running and going through this terrible war. So I know there are several mechanisms, both in insurance and also financing, which are backed in they are very creative, and they currently operate in Ukraine. And I would like to hear a perspective from the ground, how effective these mechanisms are they sufficient, and how can we expand them in case you need more?
So I think compared to 2022, so the mechanisms that I have, and also the products that even private insurance companies are offering for the business in Ukrainian, but also international entering Ukraine, so they exist. So there is, let's say, there is insurance. Moreover, as I started, that there are some reconstruction projects that are not commercial, but there are a lot of commercially viable projects, especially in energy, in infrastructure, because rebuilding is not only rebuilding destroyed things, but it's also creating something to replace what we cannot use, like a Black Sea, like all the infrastructure on the like Romanian border, like Polish border. So this is commercially, those are commercially viable projects. Moreover, they have very huge future perspectives, because when the war ends, so the kind of the throughput of those infrastructure projects will increase dramatically. So what I wanted to say, that I think there is one issue that we are still repeating, we as some kind of politician in Ukraine, but also some our counterparty in Europe, that there is a problem with insurance, with war risk, and so on and so forth. So yes, there is a problem, it could be solved. But I think now it's already more like a bit exaggerated. So if you think about what is the risk of some business to be destroyed due to the war, like in the Chernivtsi region or in Lviv region of Ukraine, the western Ukraine. So the problem is not that the like probability of risk, probability of default is big. So the problem is that the value at risk is significant, because if you lose everything. The probability is very small if you are not producing some. So and that's kind of the problem. But it can be easily insured. Like even like all the insurance company now offer the car insurance with the war risk. So it's like not for business, obviously for private people. But it didn't exist before. And apparently the risk premium is not very high, because when they did the calculation, so it ended up that the risk could be easily addressed. So my point is that it's more like barriers that we need to fix. Like the companies in the private capital in Romania, like in all other EU countries, they are starting already to understand that there are like the viable projects, they can invest there. But that barrier is still something that needs to be fixed, because a lot of companies, even on the simple level, so they don't, I don't know, they don't allow people to kind of to travel to Ukraine just to do business. You need to travel to Ukraine. The compliance doesn't allow, and so like simple things like that. So they create this barrier. And if you go to Western Ukraine, so the risk of you to be kind of to happen something due to the war is probably smaller than the risk if you drive by car from Bucharest to Berlin. I'm just exaggerating, but I think that barrier.
The risk of driving in Romania is not that small, so you're not exaggerating. You may not be exaggerating.
Yeah, I will stop here because I can talk. more, but thank you.
I think, Volodymyr, you've just touched something that's very interesting, because what you're saying actually is that there is a huge perception of risk that we do not measure, we do not really, we simply get blocked. Yeah. So that is why I was curious to see if those schemes are working, because we do have today financing for small companies backed by IFIs through the local banks. We do have insurance schemes. I didn't know about the car extension with war risk, but I knew about the property. I knew about cargo. I know there's now a new one coming in for business properties. So we can have solutions, and that is also one of the important objectives we wanted to have in this panel, is to really talk about specific solutions and see that people have the courage, people and businesses have the courage to go there and do things today, not after the war, not after a peace deal is made or some other security forces are in. I was attending another panel about Romanian companies investing in Ukraine earlier today, and I can confirm that the risk perception was very high. And yeah, I think there is, we need a bit more transparency on what can be done and what are the actual risks there. And maybe if some of the fellow panelists can help me with sharing some of their experiences in their businesses about how these things are perceived there, about going in the field in Ukraine and evaluating what can be done from their perspective.
Thank you very much. Good point, actually. And in the case of the Japan, actually, before the conference, I had the lunch meeting with my colleagues of Japanese government institutions. There, the JETRO and the JICA and Japanese embassy there, and we talking about that's a point. And actually, my point is that how can I say, the strong, how can I say, encouragement by the government is really important, because even though the current situation, the Japanese company came into the Ukraine right now, private companies, because the Japanese government provide a subsidy for their research or feasibility study in Ukraine. So such kind of the funding, because anyway, the funds is before the making a project, that the feasibility study is required, and but in the case of the Ukraine right now, such kind of the feasibility study costs very much. So that's why that funding by government and encouraged by the government to put that the private sector come to the Ukraine. That is a really good point. Thank you.
Thank you, Susan.
Yeah, thank you. So I sit on the board of 3 venture capital funds in the region, 2 in Czechia and 1 in Germany. One of the Czechia ones, and maybe this is grassroots, and at the macro level things will follow, but one of the Czechia funds, it's a 100 million euro fund, so it's not tiny for the region at all, invests exclusively in Ukrainian engineering and technology. And there's different ways on how they mitigate their investor risk around that. And I mean, you know, quite frankly, what's very true, until the kinetic war stops and there is an idea about how things will go forward, that's going to remove the most risk. So right now there's other mitigations in place, like where the company is set up, who owns the IP, how the future IP sharing goes when contracts are won and things like that. So I can tell you from a smaller VC level, private capital level, say, you know, deals going up, tickets between 15, 20, 30 million. Ukraine is an enormous source of innovation that's investable, actually. And it's these VC funds, that's what I think is actually really interesting, is that this private capital in the way, it commands a complexity premium. I mean, it is always looking at not just that particular investment, it is looking at investing in networks and systems and all the things, as you said, not just the supply chain, but the value chain. And the quality of private capital, I think that's something to pay attention to too. It is very disciplined. It's disciplined in the VC and the PE world, and I think these are very important too. And as we see from the grassroots level, this kind of investment happening in Ukraine, that's just going to lead the way for when things are more settled. So from my perspective, I'm seeing a lot of sunshine in the space.
I think if I may build on what Susan says, if you look at basically any country as to a portfolio you are investing in, you'd have different classes of financing, right? You start from the most riskier one, right? As she said, we're talking about VC-like approach, right? And you get to basically senior debt. I think what's very, very important is the strategic logic we are going to employ, or Ukraine is going to employ, associated with the idea of reconstruction. Getting it right will be very, very, let's say, conducive to choosing the right financing solution for the right project, right? Now, and there was a question earlier, making sure that there are guarantees offered to the investors through the legal and justice system in Ukraine. This can be, again, a leap forward, not only for Ukraine, but for the entire Europe. Right? Because at the end of the day, what you want to deal with in a post-war economy, and again, I have no experience, just some literature, is basically you want to make sure that the people understand the risk they are taking. High war premia or high risk premia are coming from not knowing, not from knowing. And I believe that probably the parliament, the president, if you like, the senior management of the country will understand and knows already that actually creating the proper context so people can focus on their core businesses and the risks associated with their core businesses will be critical, not only in planning, but actually delivering a fully funded reconstruction plan. So I think that this is, in essence, I think you guys know that very, very well if I'm following through. And again, to maybe repeat what Susan said, there is an enormous value which Europe can actually digest and apply in the rest of Europe, looking at the resilience developed on the go during the wartime by Ukraine. And I'm not talking only about cyber defense, I'm not talking about fighting war, but I'm talking about shifting very, very fast industries to where the strategic interest of the country requires it. And I think we can learn from each other, and I maintain war maybe is about supply chains, reconstruction is about value chains, and I think we can build that together.
Thank you very much. Alexandra, if you want to have a final intervention?
Just to reinforce what Sergiu said, because at the end, it's about learning what risks have been taken and learning out of that how to use it and not how to oppose to it. That would be, I think, for us as well, an important milestone. Thank you.
Yeah, thank you very much for your interventions. I would like to conclude now our discussion with a positive thought on the fact that risks about the reconstruction projects in Ukraine can be measured and can be taken by the private sectors with the support of governments and IFIs and international donors that will help these projects move forward and accelerate recovery of Ukraine. Thank you very much.